Good evening, everybody. It's Doc here from OnTheMoneyOptions.com. This is our weekly technical analysis of the markets for the week of February 11th, 2019. The market got off to a quiet start today, so let's take a look at the technicals and see what's going on. The first chart we're looking at is the New York Stock Exchange Bullish Percent Indicator. Now this has got about 3,800 stocks on it, and as you can see right now it's at the 50 level. So roughly half of the stocks on the New York Stock Exchange are right now on point and figure buy signals, and that's a bull confirmed. It happened on February 4th. This suggests some intermediate strength in the next 6 months in the market. This is our New York Stock Exchange Advanced Decline Line issues, and as you can see today, 916 issues were net up, which means that 916 issues were up more than those that were down. So we're still out of the bottom of the channel, but we're beginning to show some strength here at this point in time and moving back toward the channel. The more I work with this chart, the more I like it. This is the new highs and new lows for each segment of the S&P 500, the mid caps, the small caps, and the NASDAQ. And as you can see on the far right for each of the categories, we're putting in more new highs than new lows right now. So we look like we're sort of over that corrective mode that we were in during December. This is the S&P 500 RSI. As you can see in the top right, our RSI is running at about 52.42, which is a good sign. I like to see it above 50 and stay in really the 40 to 70 range. You can also see the MACD is turning up. So this has, again, it looks like there's some strength building back in the market. This is my SPI rate of change. Rate of change is still negative, but it is moving back toward the zero line. I will stay pretty cautious until I see this back in positive territory. This chart is the Russell 2000 relative to the S&P 500. I use this as one of the risk measures. As you can see, it made a pretty positive move up today, about 0.76%, which indicate that small caps are coming back into the market, and that's indicative of more risk being taken in the markets today. This chart is the S&P Equal Weight Index relative to the SPX. If you watched my video series, you know how I linked this to how much participation is going on in the market by the broader group of stocks. As you can see, we've recently put in a higher high, and that suggests that more and more stocks are coming back into the market. And again, that's a bullish sign. Here's the VIX. It's at the bottom of our Keltner channels. It always makes me a little nervous when it's low like that in terms of relative to where it's been recently. But it seems to be holding in there pretty closely to the 16 level, and I don't see any indication that it's going to change anytime soon. This last chart is the CBOE options equity only put call ratio. The PPO in the middle is where I'm mainly concerned. We see that the put call ratio is eased down, and on a PPO standpoint, we're sort of in the middle, which is a good place to be. We're not too extremely optimistic or extremely pessimistic. So right now, I'd say the market's sort of in a holding mode, waiting for the next catalyst to move it. Obviously, that could be China trade. It could be some piece of business news. It could be earnings. So right now we seem to be sort of at a level where you just have to look at each and individual stock relative to how they're doing in the market to make a decision. So anyway, this is Doc saying so long and stay hedged.